Joining us right now with reaction to this latest development is Barton Crockett. He is Rosenblatt Securities senior analyst. And Barton, what do you think? This is a pretty big heavyweight coming out in support of Bob Iger.
Sure. I think there's so many things that are just rolling in Iger and the Disney board's favor in this fight with Peltz and the other activists. Clearly the company has been on a better trajectory, certainly last quarter. The fundamental performance has been improving. The stock has been recovering nicely. And now kind of the cherry on top is a really prominent Hollywood figure and from someone core to kind of what Disney is now, supporting Iger and the current director slate. So, at this point, I'd be very, very surprised if Peltz was successful in this proxy battle.
Is this something that changes, or did you think does this really swing the needle that much, or you thought that was kind of the case before?
Look, I think the most important thing is that the business trajectory has been improved and that the stock price has been reflecting that. That's number one. Clearly, though, if someone like Lucas had come out against Iger, that would have been a difficult situation, but that's not where we are. I think that things are, for now, looking better for Disney and Iger and the board. The question I would have is longer term. I mean, I know that, they're mainly a theme park company, and the theme park business, I think, is on a great trajectory. But they've got a lot of exposure to pay TV, and those difficulties, the cord cutting, that's not going away. The movie business is more difficult than it was. So while they're doing better now, if they don't sustain, the activists will be back. So there may be a sequel, I think, to this story.
You think there's a solution to be found in the cord cutting business? Because that's something that's much bigger than just a Disney problem.
It is much bigger than just a Disney problem. And, our belief is that ultimately the entertainment conglomerates, including Disney, are kind of face pressure to break up. I think that the pay TV exposed businesses like the TV stations, ABC, the Fox, FX cable networks, those are businesses that are going to be declining and that might fit best, within the portfolio of someone who focuses on that, private equity or someone of that ilk. I think the sports businesses are going to trend towards the big tech platforms, which have the money, have the balance sheets, have the business models that are kind of next generation. So I think it's going to be difficult long term for TV conglomerates like even Disney, even ESPN to stay competitive in sports, and we'll see a big test of that coming up with the NBA. Splitting off of those types of businesses, I think, makes a lot of sense for Disney and the other conglomerates. I don't think Disney's going there today, but if the fundamental challenges recur and the activists come back, there could be more focus on that in the future.
Barton, I don't know if you saw the story yet. It was something I just saw earlier this morning about Mr. Beast, who's an internet sensation, signing a deal with Amazon Prime for a game show where the prize is going to be $5 million. And I thought, wow, is that the future?
Totally the future. I've got kids. Anyone who's got kids understands Mr. Beast is much, much bigger than anything else you're going to find on TV. So that's huge for Amazon. That's an arena where, Amazon can write the check, Amazon can monetize it. Disney's not there today. So more of that in the future. And that's really what Disney's swimming against if it wants to compete in this type of venue.